we shall not promise you, and I hope you're not going to ask about the rate of return, because that one sits with the minister. And so without further ado, allow me to invite our Managing Director, Mr. Patrick Ayota, to take us through the performance for the last financial year. You're very welcome, Patrick.
Good morning. Good morning. Yes, I am hoping that after the breakfast, we can have some more energy and we'll have the questions and answers. So I'll just take you briefly on what has happened to your fund for this past year, ending June 2024. So we'll start a little bit about the environment in which we live and we work. Pretty much the economy recovered, 6% compared to 5.3% in the year before. Inflation pretty much under check. The regional stock markets have recovered, and we'll go through most of these and you'll see. The interest rates, especially across the East African region, also increased. Now, many of you may not believe, but our currency has actually appreciated against the regional currencies except Kenya. Now, that tells you the stability of the economy over the last 1 year. So if you look at the interest rate, if you look at inflation, June 2023 was 4.9. June 2024, it has dropped to 3.9%. And part of that was basically driven by a reduction in prices for most food crops, manufactured foods, and other essential commodities. If you look at our domestic debt market, on the right to you, you kind of see what happened to the bond market. Look at the Uganda, the 10-year bonds increased from 14.7 to 16. 20-year bond increased from 15.3 to 16.7. Kenya also went up from 14.73 for a 10-year bond to 17.3. The 20-year bond went up from 14.61 to 17.75. Then the Tanzania bond went up from 10.34 to 12.3. The 20-year 12 to 15.24. The implication of that is basically it helps us a lot because the bulk of our investments, right around 78, 79, 80%, is in the bond market. And we kind of tend to take advantage of that and lock in some good rates as we do it. Because if you lock in a 20-year bond, that means basically you've got a sustainable return for our members. If you look at the stock market, all of them, Nairobi Stock Exchange, Uganda Stock Exchange, Dar es Salaam and Rwanda Stock Exchanges, all of them rose up during the year. It means that for valuation purposes, the stock that we had held in the previous year basically went up. And one of the things that happened for us this year, if many of you may know, we're big investors in MTN and Airtel, and that actually contributed to the return that we have for the market in Uganda. The exchange rate was one that was very interesting. We had a bit of, if you look at the Uganda shilling, it depreciated from 26.1 to 28.7. Against the dollar, it also depreciated from 3,668 to 3,709. Against Tanzania and Rwanda, it appreciated. The implication is very interesting. I gave this example last year. Where that comes to show up, if you think about we invest in Kenya, we invest in Rwanda, we invest in Tanzania. Let's say 1 year ago we bought a cow in Rwanda, bought a cow in Tanzania, bought a cow in Kenya. Let's say that at the beginning of the year, the Kenya shilling, for us to buy that cow, the Kenya shilling, between the exchange rate between the Kenya shilling and the Uganda shilling was 26.1. And that cow costs 10,000 Kenya shillings. It means we had to exchange 261 Uganda shillings to buy that one cow in Kenya. But now for purposes of valuation in our books, because the Uganda shilling has depreciated, in our books that cow now is worth 287,000 shillings. We still have the same cow. It's just an accounting entry, paper entry that we use. If we needed to buy the same cow in Tanzania and it cost 10,000 Tanzanian shillings, it means that we had to exchange and get 15,350 Uganda shillings to get the 10,000 Tanzanian shillings. But now, because the Uganda shilling has strengthened, in our books, that cow would be worth 14,067. And that's where the valuations show up. The cow is still there. But for accounting purposes, the accounting standards require that we need to be able to create a valuation in our books to show that. So that's where the exchange rate comes and makes a play on us. Have we done as a fund? This is basically how we have invested. We follow what's called the strategic asset allocation. Our team, led by Gerald, basically look at where do we need to be, where do we need to place most of our money. So basically what we have is what we call this long-term strategic asset allocation. Within the fixed income, which are the bonds, we say our portfolio needs to be between 70 to 82.5% of the total assets. If you look at the allocation as of the end of June, we are 79.2%. So we are still within that range. Equities, which are basically stocks that we own, some of them are traded on the stock exchange, some of them are privately held. The range is between 12.5% to 20%. At the end of June, it was 13.1%. Real estate is between 5% to 10%. At the end of June, it was 7.7%. What's interesting with real estate is, if you look at our pension towers, look at Luboa, look at Workers' House, look at Useful Will, look at all the properties we own, it's only 7.7% of our portfolio. But guess what? We get the most trouble from that because it is the most visible in terms of what we do. But in terms of the size of the portfolio, it's actually relatively small compared to the entire asset base that we have. So if you look at our performance, one of the things that I think we really want to, many of you have been following us, and I know Paul has been doing this. In 2015, we set up what we call a 20-year strategic plan. At that time, we were 5.5 trillion shillings in assets. Our goal and our plan was to hit 20 trillion by June 2025. We hit that number in January 2024, 18 months ahead of schedule. So by the end of June 2024, the fund has grown to 22.13 trillion shillings. So actually we grew by about 2 trillion shillings between January and June, which is incredible. And I will share with you later what that means for us as a fund. If you look at our funds, what we call under management, the year before we had 18.56. You look at 2023, 2023-24, we are 22.13. What is interesting is you can see that when you look at the trend over the last 5 years, we've actually been growing year on. If you look at the growth in 2019, 2022, we grew by about 2.6, 15.6, 17.26. We grew by about almost 1.7 trillion. 2021-22, we didn't grow that much. It was about 1.3 trillion. And then this year, we've grown almost by 4 trillion shillings for the financial year. So we grew by about 19.2%. If you look at our contributions, and this is a good number to actually tell, because if you follow the money, it tells a story. The last 5 years, 1.27 in 2019, 2021 was 1.37, 2022, 1.49, 2023, 1.72, 2024, 1.93 trillion. It has been increasing, and basically tells us that more and more people are entrusting the fund with their savings, and that's the story of that contribution. So last year, our contribution grew by 12.2%, which here bodes well for that. We come to what we call the total realized revenue. Remember the other revenue we talked about, the valuations. Here we take away that noise. We take away the noise of these market valuations. And we just show you what the realized earnings were. And it consists of your interest income, dividends, rental income. Grew by 15%. Last year it was 2.2 trillion. This year it grew to 2.5 trillion shillings. About 300 billion shillings more between the 2 years that we have. Now that's realized income. Money that's actually we call now in our pockets for that purpose. Cost to income ratio. If you look at cost to income ratio, for many of you who may be in the financial world, this measures how much you spend out of each shilling you raise in revenues. Our cost to income ratio was 8.66% the year before. It went up slightly to 8.77%. The best way to compare this number is if you look at the banking industry, and it's the wrong comparison because we are not a bank, but it's the closest you can come to a bank. The average cost-income ratio is around 60% for banks. In other words, for each 100 shillings they get in revenues, they spend 60 shillings in costs. With us, for each 100 shillings we raise in revenues, we are spending only 8.77 shillings in costs. Points a bit of efficiencies that we built around the fund with time. There's a measure that is used to measure the efficiency or how efficient a pension fund is. It's actually a global measure. It's called cost of administration. You take your total expenses, divide that by your total assets. It gives you what's called your cost of administration. This year, we hit 1%. In fact, our target by the end of next year is to make sure that we bring that number below 1%. Now, if you think it's been coming down and we're managing it coming down, if you do a comparison, say NSF Kenya, that number is over 2.2%. NSF Tanzania, that number is closer to 3%. The global average for funds our size, the standard's around 2%. We are at 1% as a fund. Again, to point to the efficiencies, and sometimes you call it how well you sweat your assets to generate value in that case as we do it. Compliance for us, 57%. And compliance means that an employer who remits contributions every month. That's how we measure our compliance. We want to bring that number up. And one of the things that we tell our members, please ensure that your employer sends your money because it's your money. We are collecting on your behalf. And many guys sometimes fall prey to employers who tell them, don't send in your money. You don't need to send in your NSF. They're actually stealing from you. What they're telling you is we don't want to send in the 10%. So we are telling you not to have the 5%. This is something that we need to do because it will help that member when that member becomes eligible. It is your money. So please make sure that you participate and tell your employer, send in your money. Faithfully, every month. This number, the 57, we've excluded those employers who send maybe every 2 months, they default, and then they send maybe every 3 months, then every 4 months they catch up. We've excluded from that number. But if we faithfully do that, it matters a lot for the member as they become. These are the benefits we paid. We have basically 6 age withdrawal survivor. Yeah, we have about 6. There's one there that's missing. But what's interesting is if you look at last year, we paid out 1.19 trillion shillings, which was slightly less than what we paid the year before. What's happening is, what we found out now, most people are now comfortable. The jump between 2021 and 2022 was people came for their midterm. So it jumped up from 642 to 1.189. That was a jump in terms of what will happen there. But as time is going on, we are finding almost members actually willing to let us keep their money a bit longer than they actually need. Interestingly enough, we paid out to benefits to about 44,000 members, slightly less than who came to claim the year before, 48,000 members. It's not necessarily a bad thing if your members come. That means that people are actually beginning to plan. You won't believe that there are people who came for their midterm. I think they were just testing us to see, would they get their money? So they got their money and then brought it the next day. So we think what they were trying to do is, will you guys actually pay us? And we did. Then they brought it back. But also it points that people begin to realize, you know what, if I don't have to, let me leave it there. When I'm ready, I'll go for it, and which is a good thing for that purpose. Midterm benefit payments dropped from 272 in the year before to 176. Part of it is most who should have qualified came for the money. Others are waiting. They're actually waiting until they're ready for the money to come for it, which we think is good. The other metrics, we follow customer satisfaction. We faithfully follow this. If you come to our branches, most likely there is a little thing you'll feel for us to measure this. Somebody may have called you. We do it. We're at 88%. Our target is really 95%, which is a very, very high bar. Most companies would be glad to have 70%. Our bar is slightly different, 88% in terms of what we need to do for that purpose. Staff engagement. When you come to a branch or when you interact with us digitally, you're meeting somebody, you're talking to somebody. There's a correlation between how well your staff are engaged and how well they treat your customers. It's a strong correlation. And for employers, please do not mistreat your staff. Why? Because that staff you've mistreated is the one who interacts with your customer. And if that staff is unhappy, there is no way they're going to give good service to a customer. So with us, we track this because it tells us a lot that if our staff remain engaged, they will serve our customers well. 89%. If you look at the previous slide, the customer satisfaction was 88%. And there's a correlation with those two numbers that you do. So it's really important that you're actually able to do those things. So when you look at how we deliver our strategy, people are very important, the most important people when we deliver our strategy in that case. What does performance mean? I know this is the number you're looking for. Unfortunately, my rank doesn't allow me to decline interest rate. We're going to have to wait until the 26th when the minister will unveil what rate is going to apply for this year. And we're expecting that. And please come, make sure you come. Barbara is here when we do that, which was the 26th of September, when we'll be able to know what that rate is going to be for this coming year. The implication for us is this, the performance we just shared with you, that there's a value proposition that we have always come up with. There are three for us that we promise you as members. One is safety. And safety has two components for us. One, that when you come and you're eligible for your money, it will be there. Safety, that it drives our control environment, drives how we do business. That safety proposition, that value, that we promise your money will be safe. But the other aspect of safety is interesting is, not only will your money be there, but it won't lose value in the process. That's why we have this promise that at any interest rate that we declare, it must be at least 2 percentage points above 10-year inflation to preserve the purchasing power of your shilling. So that if you gave us 1 million shillings 5 years ago, what we give you now, from interest added to it and so on, the purchasing power you had of that 1 million shilling 5 years ago is actually preserved. So that money may be now 1.3, 1.5, and that drives us a lot in terms of what we do. So this performance says that that promise we will sustain, and that promise we can keep as we go along there. The other two, of course, convenience, which is basically ability for us for you to do business with us anywhere, anytime, on any device, at any time. And we'll deliver that. That's why we find our digital channel help us. You come, you can interact with us anywhere and anytime. The last one is empowerment. Empowerment, this basically means, guys, beginning next year, I'm really encourage you guys, begin to think about saving voluntarily. So you have an opportunity when something strikes and you need to tap into your money. Because remember, the money you put in the mandatory side is locked. There are standards, there are requirements to get to it. One of the things that sometimes breaks my heart is somebody has got 100 million shillings in his account in NSSF. And his house is being foreclosed on. And he can't tap that money because the eligibility was actually prescribed when you can come for your money in NSSF. And we don't break the law. So you find somebody helpless, you're struggling, trying to figure out what you can help him, but the house is being foreclosed on. That's why I'm telling guys, as voluntary options come, save more money because you never know when you may need it. That's what we call empowerment. We empower you so you're no longer helpless when some of these instances come that you may need to tap into it. What we've done with this fund is basically now to look forward to 2035. And we've talked about this. Our vision 2035 has just got 3 deliverables strategically. That one will grow this fund from 22 trillion shillings now, 50 trillion shillings by 2035. That's a big number. That means we're going to have to grow this fund by 28 trillion between now and 2035 trillion. We think that's an easy number. I think we'll get there very easily. Is the second number that is that we need at least 50% of Uganda's working population saving the NSSF. Think about that. Right now, it is 11%. So we need to dial that number and bring in more and more Ugandans into the savings culture, saving environment. This means borders, it means farmers, it means the market vendors, whoever has that they need to begin thinking of saving for their own retirement. And the earlier somebody starts, the more money they will have with the passage of time. So you don't have to wait until say, okay, now when I get to that, I will begin saving. No, no, no. If you can begin saving at 20, begin at 20, because it matters a lot in that case. And we want to do all that, grow the fund, have more people saving while maintaining a 95% customer satisfaction level. In other words, we do not want our service levels to go down. So we'll do everything we can to make sure that the same quality of service you are getting today, we even improve on it, because we can actually do that together as a team. So thank you. That's kind of a broad just overview of how we performed. I'm going to invite Mr. Kasato and Mr. Mwanje to come and join me here. The hard questions they will ask, because these are actually their numbers. Okay.
Thank you very much, Patrick. A round of applause for those impressive results. As we warm up on our questions, the year is 2024, and we can see that the fund's assets are already past the target. You recall we had Vision 2025, and the target was to grow the assets by 20 trillion by 2025. But from the MD's presentation, you can see we've already hit the target. And so that is why now we are confidently exploring the other horizons. We are looking at Vision 2035, which is 50-95%. So the team has already delivered on the performance scorecard. If I was appraising the MD, I would have given him probably an A+. But it's not in my forte, so we'll now take questions. We've delivered. We welcome your questions. Can I ask someone to help me move this microphone around? Salim. Okay.
Hello. Yes, good morning. My name is Ali Twaha, New Vision. I just have two questions. One is on the voluntary savings that the MD talked about. We have seen in the CIS space, there's really been, improvement in terms of people saving in that space. And the rates have really been competitive. And the liquidity is always available for someone saving, maybe for emergency. I don't know how, you're going to maintain voluntary savings, to pull people to save more voluntarily through NSSF when we have other avenues, which are, very competitive in terms of the return they give as well. The other is on the midterm. I'm wondering, in terms of the trends, for the people who take their money out and the things they use to invest, when they pick their lump sum. Has there been any change in terms of the trends, what people use their money for when they pick it? Because you talked of the midterm, people returning the money. I mean, what triggered that? Thank you.
Okay, thank you so much. We'll take more questions. Kindly just mention your name and media house as you ask the questions. Thank you.
Yeah. Paul Busharizi, New Vision. You mentioned that assets under management rose by 19.2%. What caused this dramatic increase? And then yeah, basically that. What's caused the dramatic increase in and also, could you please give us an update on your real estate developments like Pension Towers and Luboa? What's the progress there?
Thank you, Paul. We'll have two more questions. And then
good morning.
Good morning.
My name is Michael Wakabi. I write for 256 Business News. Patrick, I was just curious. there was no flip side to your presentation. It looked like it was all rosy, no challenges. But looking at it from the fact that you appear to be swimming in money, do you have the opportunities to invest all the money that's coming into your coffers?
Okay.
Thank you.
Thank you so much. The fourth question, and then we'll answer that set of questions.
Yes, my name is Charles Boji. Yes. I do produce a business called Man and Markets. Mine is on a bit related to the good run that NSSF has had, especially on the money side. Those are really, really quite some good numbers. But I also know that if you ask a number of business people in Uganda today, one of their biggest headaches is actually access to money. And I know I've asked this before, Patrick. What is the level of engagement you still have with, let's say, Capital Markets Authority to at least, extend some of the, some funding to SMEs in this country to drive businesses? Because the way I look at it is that if they're able to, access affordable credit, patient capital, if you like, and then they'll be able to employ more people, and then you'll have more numbers and more people coming back to you, as contributors and the like. Then lastly is on the people who have picked their, NSSF, not the midterm access, but those that have really retired. I know there are some studies that have been done that actually a number of them tend to lose this money. I don't know whether you pick interest in actually following your savers after, they've, ticked that box and wound up, their funds with you. I don't know what you have to say about that. Thank you.
Thank you, Charles. Let's take those.
Okay, I think, let me distribute this one. I think Mr. Kasato, you'll take Paul's question, what led to the dramatic increase, and then the real estate development, update on that. Access to money, Stevens, you want to hold access to money through CMA? Then we'll supplement. Okay. Yeah, that'll be for you. I'll take the two, which is the voluntary. I think, Barbara, you may be able to answer some of this because we actually have done a study to find out. But let me just ask the first one when you say that you've got other entities that are providing voluntary savings, and the rates are very good. NSF is not meant to replace that. In fact, we don't. So we are not competing with those teams. I encourage, the first thing, let somebody save. It doesn't matter where. If you've got a unit trust, you've got a bank, please save. What we're only saying that on top of that, there are things you can do for yourselves. So offering that NSF as an option for people who want to save more or whatever it is. So it's not a competition in terms of what we need to do. But by the way, it will still be as competitive as it would be if you went somewhere else. But just the comfort to know that where you are, and especially those who want to be a bit more disciplined, because the way we want our savings to be voluntarily is goal-based. In other words, say I want an education, to save for education in 3 years' time, in 5 years' time. So you have this purpose in it, and the discipline you bring to it then helps you grow your money in that case. But Barbara, can you answer a bit on talk about, actually answer that one with the last midterm one, what people have used their money for.
Okay.
The midterm and then the...
Okay. Thank you, MD. So, like MD has just talked about the voluntary value proposition. Yes, we are not competing in the short-term space. We are focusing on basically a blue ocean strategy where we are creating middle to long-term saving options for members. And of course, we'll not diverge a lot of details because we will be rolling out these products. But the value proposition is there. We've researched, we've seen what people want, and we believe that what we are going to offer them is compelling enough to make them save with the fund. Our intention is not to take away business from the short-term savings people. We are focused on driving the savings culture and making savings a way of life. So we'll be reaching out to you with that. In terms of how people utilize their savings, actually 68% of the people who take their money from the fund utilize it in either the purchase of housing or land. That is really where they put their money. And then there is also a percentage, possibly about 20, that focus on trying to create capital, like to generate some money for themselves. And unfortunately, the reason why they are doing that is because they have not utilized their work life well. So even when they have retired, they are still trying to generate revenue so that they meet basic needs like education. They still have to focus on things like feeding, clothing, and the likes. And that is why the fund has a very compelling financial literacy program to try and change the behavior of people and get them to realize that when you're in gainful employment, that is the time when you actually must be planning. And the fund wants to make saving a way of life so that you don't just wait for that long-term saving, but you have middle income solutions and products that can actually help you achieve your midterm objectives. We'll proceed with the next questions.
Thank you, Paul, for the question. His question was basically what led to the growth of the assets. Because as you saw from MD's presentation, the assets grew to 22 trillion, which was well in excess of the objective of getting to 20 trillion by 2025. This was achieved 1 year ahead of time. So the reason why the assets grew was basically due to a couple of things. One, our contributions grew by 13% year on year, but even more so, the money that we realized, the money that we made from our investments was very, very good. When you look at the year-on-year situation, the realized income, as you saw from Patrick's presentation, grew by 15% to 2.528 trillion. Last year, it was 2.2 trillion. So the movement is 15%. Now, part of that was driven by the recovery in the equity markets. When you look at the return that we made on the equity side, we made over 20% year on year. That is when you compare the movements of the prices and the dividends we got. To give context in terms of the dividends, year on year, our dividends grew by 21% from 145 billion last year to 175 billion. That one was on account of the two big investments we made in the year. We made a big investment in MTN and another one in Airtel. Airtel was IPO, MTN was a secondary issuance. To give the numbers of MTN, the dividends we got in the year from MTN alone were 40.5 billion, compared to last year, which was 30 billion. That is, again, a movement of over 31%. Airtel, we made almost 22 trillion. Sorry? Sorry? It's almost 22. You know, 22 is associated with assets. So it is kind of, yeah. So we made 22 billion from Airtel, and we made 40.5 billion from MTN in dividends. Now, there are a couple of other counters that gave us very good dividends, like Equity Bank, 19, Safaricom, 19, TBL, 10. So basically, the point I'm making is that we saw very good dividend income year on year, but then there's a story on the recovery of the equity markets. When you compare, if you remember Patrick's presentation, the example of the cow, right? The exchange rate recovered this year in our favor to the extent that we made 255 billion in exchange gains alone. And when you amalgamate all our equity positions year on year, the fair value gain on equities was over 300 billion. So when you put all that together, it explains why year on year we moved from almost 1.9 trillion to 22 trillion. I think that one answers the first part of Paul's question. Now the second part of the question is on the progress on real estate projects. Pension towers today, we stand at about 82%. We had hoped that this project should have been completed this year, but unfortunately, by the look of things, we can't. We are looking at the project being completed next year. In terms of the other big projects, Temangala, we are at 45%. Mbale, we are at 75%. Yusufule, we are still at design stage. We hope that the design will be completed. It's a design and build, and when the design has been approved by the local authorities, we'll start construction in this financial year. In terms of Lubowa, Lubowa is no longer a project. We are now selling. We have received over almost 7 billion in cash deposits. We have offered almost 76 units to the market, 76 out of 306, which is again over 30%. Given the issues we had last year and the issues around Lubowa, I think for me that is a good progress. The others I can give more if the questions come. Thank you.
Thank you very much. On to the next question. Michael, I hope I got your name, if I remember your name correctly. And I think in a nutshell, your question is, why aren't we providing patient capital to the SMEs? Your question is kind of tricky because that puts us in kind of a rock and a hard place. Because our first obligation to the savers is to safety of the funds. Now, the key characteristics of SME is lack of corporate governance structures. And we would very much like to play in the space of private equity, where most of the SMEs lies. But then how do we follow up if, for example, we give a company XY SME and give them 200, 500 million shillings, when the decisions are made either in the bedroom or the breakfast table and you are not involved? How do you follow up? Because that is the biggest issues. We are still trying to crack that. The moment we crack, we'll be happy to play in the private equity space. So, and then there's this notion that probably there's a lot of money in NSSF which should be directed to anything that comes our way. But we have very, very clear guidelines and we have strict investment policies on where we can. We do very, very critical and serious due diligence in any business we invest in, because we are tasked, number one, to protect the money, like Patrick has already said, but also to give a reasonable return on our savings. But all is not lost. We have other avenues that we are developing with external partners. One of them is through MasterCard and our High Innovator project, and we are soon partnering with other players in the market, financial institutions, to find a way how we can crack that particular problem. We've not given up on it, but we want to make sure that the moment we start doing it, the savers' money is going to be protected, and we'll be able to give that saver a good return, but also play in that space which can help with the economic development of the country. Thank you.
Maybe to add, we've actually tried, in spite of the challenges, we set up together with the European Union in 2017, we formed the Yield Fund, which is a fund which is focused on agriculture. It has financed 15 small and medium-sized agricultural enterprises. This fund was basically almost 20 million euros, which is, if you convert, which is over 80 billion. The reality is that with SMEs, as Stephen has said, given their governance challenges, corporate governance challenges, it is difficult to deploy big checks. But, 80 billion, over 80 billion to the agricultural sector alone, and this is a fund that can actually also be replicated maybe this year or even next year. For me, that is some kind of intervention. It's not adequate, but it's not like we're not doing anything.
Thank you.
I just wanted to give a bit, the phrase Michael used, swimming in money. And Michael, let me tell you something. The performance that you see is, there's a discipline within the fund, which is amazing. If money came in the fund, like contributions came in by 10 a.m., Usually by midday, they've been invested. There is no idle cash that sits in the fund because idle cash doesn't give you, it's not productive. So it's reinvested constantly. New money, old money, that's why we are in these three big markets, Tanzania and Nairobi, actually absorb the monies that we collect. But there's a discipline that's followed. I can tell you by the money gets now 10 a.m., by 12 is reinvested. And that's how you can keep and sustain the returns that you get. Thank you.
Thank you so much. Ladies and gentlemen, we'll have another round of questions. Yes, please.
Well, thank you very much. My name is Simon Kagwanjala. I come from Next Media. I find it rather ironical that when the economy came to a standstill around COVID, NSSF was making profits and doing very well. The presentation you give is quite rosy. Who audits you? Thank you.
Thank you, Simon. Any other questions?
Hello, my name is Ruth Adon from Sanyo FM. So I have a couple of questions. Barbara, the report that you cited said when people retire, about 60% are investing in homes or building homes, and remember the other percentage is education. So we come back to that question that we normally ask. Low-cost housing, NSSF win? Yeah? And then to Mr. Kasato, what is the amount of revenue lost to non-performing investments like Uganda clays? That's number 2. Number 3, I'll come back.
Thank you. Let's have more questions.
Good morning. My name is Anton Wesaka. I work for the Monitor. My question is about the payout of the midterm. And I just wanted to find out, did the payout affect the fund's capital base? Because this was some good money that you had to pay out at once. And also, I wanted to find out about the continuous payout of the midterm. How much are you paying monthly? Thank you.
Okay, good question. Yes, we'll have 2 more and then close this round.
Hello. My name is Paul Murungi. I'm a business journalist with the CEO East Africa Magazine. I want to understand Mr. Patrick Ayota taking on the role of MD and taking charge of the fund. What are some of the key decisions as a new management that you took to see that you saw this performance? Thank you.
Thank you.
Hello, my name is Deogratius Wamala. I write with National Media. I have like 2 questions. First of all, is the NSSF's participation in the equity market on the stock exchange. I had interacted with some executives from the Capital Markets Authority, and they told me that, like for instance, when NSSF is interested in a company, you know that that's an interest of around over 50% or something.
Can you please speak a little bit louder? We are not picking you.
Hello, my name is Deogratius Wamala. I write with National Media. I was talking to some executives from Capital Markets Authority, and they told me that when an interest from NSSF in a company comes up, it's around 50% or more. Well, it's true to some extent, but they were also concerned that when NSSF buys stake in a company, it also holds it, and that's detrimental to liquidity in some of the companies that we've seen. And they say that there's some interest. They want to bring NSSF on the table to see how it can participate in increasing liquidity on the market. I don't know if there are any conversations around that. The other one would be on, someone pointed about how NSSF can help SMEs. Some people last year said that with the potential of assets that NSSF has, it can tremendously relieve the government from this external debt and all that. I understand that you invest out of money in bonds. Are there any, do you have any strategy on how you can use these assets to understand you allow savers to get this money, but how are you allowing the government to relieve that pressure from, for instance, debt, the entrepreneurship that is booming the
have you ever tried following up with some of the members who drop out from saving? And then you say that there is a lot of feedback that comes from your performance. The servers always fill the forms and what. So what has been the biggest challenge to some of these members who have opted out from saving? Thank you so much.
Okay. Thank you very
Right.
much. Yeah.
So I think who audits you, Mr. Mwanje? That will be your question. Low-cost housing, there's a lot of work that Gerard has worked on, and also how do you account for the lost revenues, like Uganda clays. Payout, whether the capital base was impacted. I think that one I'll answer. MD's role, whatever we've done, I'll answer that one. Dear Gracious, NSSF participation in CMA, I think Gerard. The Barbara, you can touch on the medical insurance with All Mutual, what we are thinking doing in that space. Members who have opted out, I think you can touch that one too. Then we'll go continue. All right. Who audits you?
Okay, that's the easiest question. Quick background, NSSF is set up by an act of Parliament. So by law, it is the Auditor General who audits NSSF. But over the year, the Auditor General delegates that to external parties. And the three auditors, our current auditor is KPMG. The one before that was PwC. The one before that was Ernst & Young. The one before that was Deloitte. So those are the top big four. And we rotate around those. So we've got the best in the country to audit NSSF.
So Simon, the numbers are very good. The numbers are actually good. And in front of you, we have auditors, we've got CFAs who also confirm these numbers.
Thank you. There are a couple of questions that I'll respond to. The first one was on affordable housing, because 60% of the money that is received by the members is actually spent on housing. So the question was, what is the fund doing in terms of providing affordable housing? We've always stated that for us, this is a work in progress, but I think the question of affordable housing has to be understood with some bit of context. There was a study that was done by the National Planning Authority. And actually, according to that study, it was a policy paper on housing. National Planning Authority is the body which is charged with planning for the country. And they did explain, or they did illustrate the challenge that the country has. According to the study, the median earnings of Ugandans were about 168,000 per month in the rural areas. In the cities, the amount was about 220 or 230,000 shillings a month. According to that paper, they said that for someone to deliver homes or affordable homes for people who are earning that low, you needed to build a house which was between the range of 14 million to 24 million shillings, or 22 million shillings, or thereabout. So the reality is that affordable housing is always going to be a very, very difficult thing for the fund to achieve, especially if it is understood with those sort of figures, where you're building a home which is 20 million or 14 million, because the fund buys land. But what we've done is to compare ourselves with what some other people are doing. The other day, we had an International Social Security Association seminar in Ivory Coast. And there was an interesting presentation from the scheme in Sierra Leone, which has done affordable housing for its members. And the price point is about $30,000. Now, when you compare two countries, Uganda and Sierra Leone, actually, Uganda is richer because Uganda is middle income, and Sierra Leone, the GDP per capita is $521. But you can see their definition of an affordable house is about $30,000. So the question is, what is NSSF doing in terms of the price point of $30,000 or even below? We have projects like Temangalo. Like I said, Temangalo today is at about 45%. Temangalo is expected to have 3,500 units, and the price point is expected to be between 90 million to 400 million. We believe that for a house of 90 million shillings, or even below, so many Ugandans can afford. But having said so, there have been projects in this country where you have a price point of even 50 or 60 million shillings for an affordable home. The reality is that that unit will be about 40 square meters. And again, according to the statistics, an average household in Uganda will have about 4 or 5 people. Realistically, a household that has 5 people can barely fit in a home of 40 square meters. What the fund has decided to do is to offer bigger spaces and quality buildings for the projects that we are doing. The only challenge that we are facing today is the speed of execution. But we believe that that is largely driven by our tenure system. Yeah, but I can get, if you want, we can have a discussion on what can be done to actually bring the cost down, the cost of land down. The other issue we have is the taxation. VAT becomes an input because VAT on residential housing is exempt, which means that VAT that you incur on paying contractors and the other related inputs, you cannot pass it on to the buyer. So it becomes a cost. Infrastructure, you cannot do a project that has more than 50 units without roads and good electricity or very good amenities. Yeah. So the cost of infrastructure on a project constitutes between 10 to 20% of the project cost. Today, the point I'm trying to make is that the fund can bring the cost of the house down by 50% if there are interventions on land, interventions on infrastructure, and interventions on taxes. But in spite of that, when you look at the price point we have, for some of the affordable projects we have, they are very, very competitive in terms of quality and in terms of amenities and in terms of size. So that is the first question. The second question was on the impact of some of the non-performing investments like Uganda Clays. This year, we actually wrote it down. There was an impairment on Uganda Clays to the tune of 2 billion, to the tune of 2 billion. So that is the impact. But we do not look at individual investments. We look at the total return. When you look at the investments in totality, the return was very positive, as I explained earlier on, because you had dividends of 175 billion compared to 145 billion the year before. You had capital gains of 300 billion compared to a year before. So all in all, in spite of that hit on Uganda Clays, our investments performed well. Now I get to the questions from Deo. The equity market, the lack of liquidity, and there's so many discussions he's having with executives at CMA in terms of improving the liquidity, because usually what happens when NSSF buys a stock, it really sells. I think there's a point there, Deo. Timing is one of our key strategies that we use when we are buying or we're getting into positions. We target, value stocks, especially on the Ugandan market, because the liquidity is low. When you compare the liquidity on the Uganda Securities Exchange, it is actually the lowest in the East African region. Because Kenya today, you can have a liquidity of $1.5 million, but before COVID, that liquidity on the Kenyan market used to be even more than $10 million daily. By contrast, the Uganda Securities Exchange, it is hardly even 5,000 a day. So what are we trying to do? There are rules on market making, which CMA has actually published. We will engage, and we're having discussions with the USE in terms of how we can play the role of a market maker. The question for us is whether a pension fund of our nature can actually do market making, because market making is normally done by broker dealers. But if there are rules and we consult with all the so many stakeholders we need to consult, and they say you can go ahead and do market making, that is one of the interventions that can be done. There are also conversations on securities lending. Again, that requires a tweak of the regulations in terms of making our securities available to people who can, sell them, and they give us a commission. But these are discussions that are actually happening. The other question from Dewo was on the borrowing that government actually undertakes and what the fund is doing. When you look at a balance of payments, Dewo, Uganda has consistently had a current account deficit. What that means in terms of economics is that when you have a current account deficit, you're going to have a surplus on the capital account, which means that money has to come from abroad. The role that the fund plays as an institutional investor, it provides money to government through bonds whenever there are bond issuances. Today, you'll struggle to get an auction fully subscribed without the fund's participation. We believe that without our intervention, probably the outcome would have been worse in terms of the interest rate situation. I think those are my questions. Thank you.
There is a point that I really want to emphasize, and Gerald raised, this thing about loss making, or about portfolio. Investments are about portfolio. The reason you have diversification as a policy, some assets you invest in, remember, an investment is a decision that you make regarding tomorrow. You are buying this asset, hoping it works out. Some go down, some go up. Diversification allows you, in totality, the whole entire portfolio has gone up. So usually some people get so emotional or angry about, but Uganda claims has gone down. But in the totality of the portfolio, the entire portfolio has gone up. Because remember, we're making these decisions based on the information we have today, the best information we have today, and there's no guarantee about it tomorrow. It's very, very important to get that. In fact, the question that you should always ask, how are you guys diversified? So that when there's an asset that's not doing as well, there's another one that makes up for that asset. It's a principle of investment that we actually do follow. He also mentioned something that we are trying to do with the low-cost housing. If you follow a lot of the countries that have been able to deliver what we will call low-cost housing, the government has been heavily involved. Kenya has got, in the delivery of the R4, Kenya went and bought land and gives developers land, allow waive taxes, put in the infrastructure. And like Jera said, you do that, you can reduce the cost of housing by 50%. We've engaged our government to say, okay, if we really are serious about delivering what we'll call low cost or affordable in this country, let the government also come out to play. And now the slowly they're beginning to move towards that area to understand that there's no entity by itself that can do it without a government. And it's important to get that right. Anthony, you mentioned something, payout capital base. I mean, we just showed you the growth of the fund. It was between 2021 and 2022. No, 2022 and 2023, when the law was passed for midterm. We got about, the increment in our payout was about 500 billion shillings. The dip, during that very period, our assets went up from 15.3 to 17.6. So it didn't cause, it was a dip, but wasn't a serious dip in terms of what we have. On a monthly, last year we paid 176 billion shillings in midterm. On average, divide by 12, that's going to give you about 13 billion shillings on a month if you did a monthly. But remember, it's not a monthly 13 that they come. Most people are now very clever. They wait until the interest is announced and they come. So towards the months of July, August, and September, people wait so that they can get the interest rate they come. So that would be what you see on a monthly. Paul raised, since I've been new MD, what's the key decision that I made? Let me just say this so that you can understand. The fund has not begun doing well yesterday or last year. The fund has been doing well if you follow that trail. So Richard, the former MD, did a good job in putting a team together. having the right strategy in place to make sure that the fund has grown. So guess what? If it's not broken, don't fix it. Don't try to fix what's not broken. So I think the best decision will see, okay, what needs fixing? And those that are working well, don't mess with it. The team is together, and the team is delivering in that case. I think it's you. Dealing with the medical insurance and the... Yes.
He said he wasn't getting the sound.
You're not hearing me? Okay.
You got the sound, eh? Okay. Thank you so much. I think I have two questions. The first is around insurance for members, Benjamin and Otage. Yes, we've looked at the insurance conversation, and majorly, there are two things that are very critical. The first one is adequacy of the members' benefit to fund that proposition. Because when you look at it, most of our members actually earn less than 1 million shillings. And then that also impacts on the average payout, which is between 20 to 24 million. And so for the fund to provide an insurance value proposition, we actually are now going to anchor it on the new NSSF Amendment Act, which gives room for us to innovate. And we are looking at the voluntary space. So we have considered options, and within the next 1 to 2 years, we already have a value proposition. We've looked at the micro space, and we've also looked at the usual space. And we are also cognizant of the fact that the needs of our members varies across their life cycles. The older members are more concerned about medical insurance, and they are more interested in a benefit which is similar to the medical cover that most insurance providers have on the market. And so we've actually come up with some solutions around that for the older members, and also a financing plan. And then for members who are in very risky situations, which is the micro segment, we've also looked at the micro insurance. However, we've also realized that micro insurance is actually struggling on the market. When we engaged insurers, they told us it's not profitable, and even the mode of claiming. So that is an area that we are still looking at. We don't yet have a compelling value proposition, but we'll start with the proposition for the older members with a clear financing path. So for that, we have a solution. The other question was around dormancy and the cause for dormancy. Yeah, really the biggest cause for dormancy is loss of employment. When someone loses their job, their employer then stops to remit. The other one, of course, is non-complying employers. So what has the fund done? In order to drive, first of all, the obvious, which is the low-hanging fruit, that is compliance. You saw the rate is 57%. We, of course, have a whistleblower platform. We are trying to get employers to appreciate that they need to continue to remit the contribution. But for those who are actually just dormant because of lack of employment, we have engaged them as well and encouraged and cross-sold to them the voluntary proposition. And I can say that over the years, that number has grown. People who have, because the old act actually supported members who had lost employment but were willing to contribute for themselves towards their retirement to do so. So several people came on board, and actually that portfolio now is close to 200 billion of members who voluntarily, after losing their jobs, said, I'm now in self-employment and I can actually make a contribution. So there's definitely a lot of work to be done around the dormant accounts. And I think we'll take up that challenge and do a delve into and get more data around causes of dormancy and value propositions around that. Thank you. Can we have more questions? Yes, we have a hand at the back.
Thank you. I'm called Isaac Moding from the Vision Group. Okay. I wanted to find out, there was that famous parliamentary probe, and it came up with some recommendations. is it possible to share some of the what you have been able to fulfill on those recommendations? I know many of you were roasted in that probe, and then was it from your own assessment, was it that probe useful? Has it helped you to change some of the things? Thank you.
Thank you, Benjamin. Can we move on to the next question?
Sierra Cabona is my name. I write for the East African. Just a previous day ago, I was talking to one of the union leaders. It's an area that Patrick says it may not be about interest rates. This union leader was saying that this year you have had little. I don't know where you got the data from. You don't have pressure like you had the other year when you had to pay the midterm. So for them, they were saying, why isn't the fund giving them what it gave them in 2018, if you remember? That's, I think, the highest rate the fund has ever given. Thank you so much.
Thank you.
Thank you. My name is Stephen Imbide from Asian Media Group. In April this year, NSSF lost a court case. You told us that you intended to appeal. Just want to get an update. Did you indeed appeal? And what happens because NSSF continues to invest in Lubawa land and people are still scared. They don't know whether they will be evicted tomorrow. So what exactly is happening? And if you indeed said, okay, let's settle it out of court. Thank you.
Thank you.
Hello. My name is Deogratius Wamala. I had already introduced myself. My question would be on what advice would you give to these people who are taking out their funds? For instance, someone is taking out like 100 million. In more developed countries, for instance, they would follow the exact blueprint that you follow. For instance, one would put much money in fixed income and then equities. But one of the panel members say that most of these people put it in real estate. So would you also advise these people to keep this money into income-generating assets? Because I think there are like two types of people, institutions and also individuals. So what advice would you give someone who's...
Okay, thank you. Yes, we have another hand on this table.
Hello.
Oh, yes.
Just one more question, especially on corporate governance. I want to know how are you incorporating ESG principles in your operations? Because this is a new global agenda. And is there a cost to it when it comes to implementing ESG governance?
Thank you.
Yes, thank you so much. My name is Michael Jordan Lukoma. I work with UBCT. The technical information is impressing, and kudos to NSSF. But now I will stand up on behalf of the ordinary saver, a teacher in Gulu, a police officer down in Chiboga. The institution has been embroiled in corruption scandals several times, relating big monies, savers' monies. Mr. Yota has the information that 2 of his predecessors have not left office on peaceful grounds, but in relation to such issues. So what does your administration, what kind of mitigative measures does your administration come in with to ensure that no saver will again be worried or get anyhow scared about the safety of their savings? Because this technical information, it is people like us that may consume it and get to understand the rates and whatever. When they save their money, what matters is it being safe, and they get it when they need it at the right time. There is that problem. What kind of mitigative measures is your administration coming in with to ensure that these people's money is safe? Thank you.
Thank you very much. I think we'll take those.
Okay, so I think, let me see. Stevens, you take the ESG. That's in your baby. ESG.
ESG, yes.
Mr., you take the Lubawa. And then Barbara, that's the one you want to take on. Can you take on an interest rates? Lubawa and interest rates. Those are the ones there. And then, let me see. What advice you give? Barbara, you want to try that? With advice you give to the people who are taking their money, where should they put it? Okay. So we can do that. All right, I'll begin with the famous parliamentary probe. And the question is, was it useful? What you answered the recommendations that were made. The recommendation that Parliament did, some of them we did take, some of the changes we did make. Was it useful? I think if you take the long-term view, there's nothing under the sun that's useless. Everything has value. For everything works out for good. So there are things we learned through that process. There are things we certainly learned a lot about being misunderstood. And as a fund, we decided one of the things that we did was, that's why when we're having this lengthy, it helps kind of dispel some rumors, misconception, misinformation. Because some of the things that came through the probe were just because people didn't understand the fund or how it operates. So it has really helped us be more engaging in those things as far as we know. And I'll take Ms. Alokoma's question on top of that. I think, Ms. Alokoma, you say the embroiled in corruption. I think you have a very long memory. And the long memory you have is, the last time actually, you guys, when you think about, there's being accused, there's being found guilty. But if you think about the last time really the fund was, well, that was really like in the 2010s, 2011s. Since that time, people can accuse us of whatever needs to be done. But the very fact that the fund is growing, the very fact that we are giving some more money, more of their money, tells you that actually there is more confidence in the fund today than there's been there. We cannot stop anybody from accusing us. I cannot stop anybody or hope that nobody will accuse me. They will. But accuse me, hey, even Christ was crucified, not because he was a sinner. So people will accuse us. But the essence of it is actually when you go through a systematic governance and controls, and they come and probe and find nothing was there, you're fine. So that's the whole point. We make that. And for you guys in the media, that becomes then your role to do. What do these numbers mean for the saver? What have you heard? But we'll engage you, we'll let you know what happened. But I'll tell you the confidence of the fund. Today maybe we can see there's what we call a brand index, which measures the perception of people in the marketplace on a brand. The biggest brands in East Africa today, NSSF is one of them. The leagues of Safaricom, in terms of what happened, that's just how people think of that. So accusations will come. In fact, don't ever be scared of being accused. It will come. People will misunderstand you. But let them accuse you and let time be your friend to tell that, no, it was false in terms of what needs to be done in that case. So I think that's just what it is. So we are very cognizant of that, but comfortable enough to do the right thing that we know that will vindicate us in the process. Over to you.
Yeah, thank you, Mr. Kabona, for the question on interest rates. Basically, it says that now that midterm access seems to be not an issue, according to his source, who he believes is very credible, there's no reason why we shouldn't be matching the record of 15%. First of all, I would like to acknowledge your source, because unions are part of our partners. Yeah, we have a tripartite board, so we have employers, unions, and government on the board, so unions are our partners. But let me say this, the interest that we pay is a function of our performance that financial year. When we get our total return, we subtract the tax we pay. Unfortunately, the fund is not tax exempt. We are supposed to pay taxes, and indeed, taxes affect the money that we give to members. After taxes, we then deduct the cost of administration. As you saw, that number has come down to 1%, which is good because for schemes of a similar size, most of them, the cost of administration tend to be at 2% or even higher. So what I can promise Mr. Kabona is that the interest rate will be very competitive in the circumstances. That is the preserve of the minister in charge of investments. And on the 26th of this month,
next week,
which is next week, we will get to know what that number is. But I can tell you, based on the presentation as you saw, I think it will be a very competitive number. Then there's a question from Stephen Mbide about Luboa, where he says in April we lost a case. And according to him, we are still continuing with our investment program in that area. What I can tell you is that losing a case does not necessarily mean it is the end of the court system. The judicial system is such that you can go all the way to the Supreme Court. We believe we have a strong case. We have not exhausted the judicial process, and we have belief in the judicial process. So all I can say is that we've done an internal assessment, and we will continue proceeding with our case according to the structure that have been provided in terms of what you can do if you feel aggrieved. Yeah, so the merits of our arguments, I cannot delve into them because that would be sub judice, but that is a matter that will be handled by the courts, and we trust and believe in the court system. Thank you.
Thank you very much. Before I delve into the ESG, let me also make one further clarification about the interest rate, following on my colleague. NSSF is a provident fund. So technically what that means is that almost everything that we earn is distributed to the members. So we hardly have any retained earnings, and you can check that from our financials. So whatever we earn, we give it all. We don't retain. So if they tell you the air has been comfortable, I'm sure the minister will declare something comfortable. So
in fact, Stephen, the one thing that this year alone, a 1% rate, 1%, you need 180 billion shillings. 1%. So you can see the magnitude of every rate that you declare.
Okay, thank you. So someone asked about the ESG. I'm sorry I didn't get your name. And whether we're incorporating it in our governance structure, and whether it's cost to the to the fund. What we like to assure all our stakeholders that NSSF is always ahead of the curve when it comes to new developments. We've started actually embracing ESG principles even before they became the catch zone. So we realized, for example, this is going to be around our 5th year in putting out the integrated report. For those who are not initiated, integrated report is one of the way of reporting that you are complying with ESG. We follow the UNDP development goals. If you go and look at our financials, you will see that we clearly delineate what we are doing about ESG. If you look at the projects that we've been talking about, if you go to, for example, let's start with Pension Tower, it's going to be the first smart building in the region. Yes, smart, totally smart building. The kind of technology you see with a smart building in Dubai and whatever, and that one is here. If you go and look at the projects like Lubowa and what we are doing about energy, water, and even sewage disposal, is state of the art, because we have gazetted a very big part of the acreage to make sure that we can deal with the sewage that is going to come from the project and put it back into the natural reservoirs like Lake Victoria when it's actually clean and treated water. But we're also in the future thinking of how we can recycle it to do other things like gardening, watering, etc. If you walk into NSSF right now, the way we are decarbonizing, we are forced to come with these notebooks because we are coming for a brief conference, but we don't have paper. All our operations are totally paperless. NSSF is semi-smart. If you live on the light, don't think that you'll find it on when you come 5 minutes later, etc. So is there a cost to it? Like everything, there is a cost to it, but because we are embedding it in all the activities that we are doing, it is becoming our day-to-day business as usual to us. Yes, the cost is there, but we are not delineating it from other costs and saying, what is it taking us to do the ESG agenda? Because ESG agenda is part of everything we do. When you go to our staff and when you look at what we do in terms of work-life balance, the way we do our appraisals, everything is, we are following the ESG agenda. So yes, NSF is doing it. And lastly, if you followed last year, we put out a specific, a different annual report, ESG booklet. And we are going to do that this year. I think it should be coming out next week, separate from our financials. So that's how strong we are in ESG. And by the close of this year, we're also going to have a separate section that particularly deals with ESG and coordinating the whole ESG agenda in the fund. Thank you very much.
I would really encourage you, when you get the report, read it. The one thing that we've not done as a fund is to, people call it greenwashing, that some of these things are done just to tick a box. Ours, we've actually made it part of our life. We're never going to go back to paper. We're going to be paperless, and the number of trees you save doing that is amazing. Stephen mentioned earlier on, remember the ESG, sometimes we think it's just about just the environment. There's the S, dealing with the social. And the social is varied. It deals with the employment, deals with the gender issues, and those agendas we embedded in the fund. We create employment now. I think he mentioned the high innovator, funding startups. Last year, we funded 368 startups, and we've created over 12,900 jobs. And by then, they become members of the fund. So our own survival is depending on us creating a member, which makes it sustainable and not just a greenwash in terms of what we do.
Thank you. Definitely the ESG agenda is very close to our hearts as well in marketing, because I think you all see the interventions in the corporate social responsibility space, in the areas of education, where we usually have a run, and proceeds from the same go towards refurbishment of public schools. So far, we've refurbished close to 70 classroom blocks, and this has created a difference in very many lives of children across the country. And we are also going to do a partnership with Vision, where we are doing e-class. So basically to improve on digital literacy. So really, in every department, we are very conscious of ESG. But lastly, to focus on the question that the MD asked me to tackle, which was around educating members when they're exiting. I first want to, by a show of hands, to ask how many have attended a financial literacy session at the fund? By show of hands? We only have one person. I'm taking that as a personal responsibility. I hope you won't let us down. We are going to arrange a special session for members of the media. I hope you will come. Do we have some response from you, a commitment?
Yes. Actually, Barbara, before you go on, we did research and found something very interesting. We used to say that when people are getting close to retirement, that's when they need to have financial literacy. You are 50, we know you're going to turn 55, so let's start on you. What we found out, interestingly enough, even with midterm, 2 years before you get that money, you've already spent it. 2 years before you get that money, in your mind, you already planned how you're going to spend it. And there's very little amount of education that will make you change your mind. You actually tell us, I know what I'm going to do with my money. So what she's talking about now is we start much earlier, 10 years before, because there you are still, your mind is still willing to learn. So the financial literacy that we are going to be running, you'll find us going much, much earlier than before, because otherwise, for 2 years before you get your money, people have already made their plans to spend that money.
Thank you so much. So we have a date, and this time around it will not be about stories, but just learning about financial literacy. And yes, we've been doing this since 2016, 2017. We rolled out the program. In that, there was a session we had Money Talk, and from that time on, we've been having several sessions with our members, telling them about money, telling them about the various options that are available. Of course, you can choose to actually replicate what the fund does. Put your money in a bond. You need only 100,000 shillings to open a CSD account. And then start participating. Several commercial banks are primary dealers. Where you have an account, just ask them if they can actually open for you that account. And then you'll be transferring money. When you earn interest, they put it on your other account, and you can roll it over. So it's very simple. So the options available are just what NSSF is doing. Start with the money instruments, and then go to real estate, and then, of course, equities. And we can also do it. Actually, I'm one of those who has benefited by working for NSSF. I was in banking 10 years before I came to NSSF, but I had never appreciated the value of investing in a money instrument until when, of course, they usually challenge us to go and sensitize members. So whenever I would go and talk to the members, I would keep asking myself, won't I become the statistic? Next time round, I'll be the one who has utilized my money in 2 years. So I challenged myself, and I took part in a bond, actually, 5 years ago, my first bond. And I was very lucky that I invested in Feb. I think I invested in Jan. In Feb, I earned the interest, you know? And then in August. So actually, I called the treasury person, and I said, is there a mistake? How come? He said, no. You're lucky that that bond, actually, the interest was scheduled for that month. So imagine you earn interest twice a year from a bond. And if it's more than 10 years, the tax is actually only 10%. So it's a challenge. You don't need a lot of money to start. Start and do something with your money right now. You can make a difference. Even land will appreciate. You find that after 10 years, your plot has actually appreciated by 10 times, you know? It happens, and we can all attest to that. So really, we are available to educate members, starting with me, starting with you. We are all members of the fund, and we have to be a difference. We don't need to be part of the statistic of the 98% who have used their NSSF retirement saving in 2 years and have nothing to show. Thank you.
Just one more thing to financial literacy. NSSF is always ready to partner with any organization, any company, big or small, whether it's compliant with NSSF or not, because financial literacy is a national crisis, which we, as part of our ESG agenda, she has said, we deliberately go out. So any organization just approaches us, and we are always willing to go in there and do the financial literacy. It might be one session or a couple of sessions. The choice is with the organization we are dealing with.
Thank you. I think we've come to the end. Oh, I see there is one more hand. Are you asking for translations? Okay.
Nayanza amanyanze Julius Kafuluma kola ne Wokede TV. Bino nkakasa Patrick ayinza obutasobola kubiddamu naye ajja kuba wabiwulize bulungi. Now, tubayozayoza kubanga ekitongole kyongedde okukula, ekyo kirungi nnyo. Naffe twandetaaze okureportinga ku kitongole ekikula buli mwaka. However, twagala mukulu Kasaata tutegeezeeko ekisooka ekitongole kino kikuze mu ki? Mutugambye nti mwakuze mulina ebintu bye mweyongeddeko okusookera ddala. Mwakuze assets zammwe zeeyongeddeko, contributions zammwe zeeyongeddeko, amagoba gammwe geeyongedde kuva ku ki okudda ku ki. Osobola okutuwako mu figures ne percentage at the same time. Then generally otubuulire ekitongole kyakuze kitya. Bw'onaaba ovuddeyo mukulu Kasaato otubuulire mwafulumya report ne mulaga nti ebitundu 6 ku buli 100 ebyaba
We continue with that, the Luganda session after, so that we have all the media houses that are interested in the Luganda translations to just come closer, and then we take the interviews will be provided by Gerald and supported by Stephen. Yes, sir. At least I got the first Twegairi day. Is that okay?
It's okay.
Yes, okay. We arrange the Luganda translation separately.
I think we can start the Luganda translations can come closer.
Okay, ladies and gentlemen, now that we've entered into the Luganda session, we just want to appreciate each one of you. And of course, I want to appreciate the marketing and corporate affairs team. They are usually behind the scenes, but making a big difference. Thank you so much for the contribution that you make. I can see some of them smiling. Tito, Victor, Joseph, Salim, I see Abraham here, Christine, thank you so much. We'll now close this session, and for those who want to continue with interviews for the MD, we are going to arrange for that, but now we are progressing into the Luganda version, so I'm asking those who are interested in the Luganda version to just move closer. We have here our two gentlemen. Abasajja bakabaka. Yes, we can.